Okay guys, what's up? This is 7-Star Mike, and I wanted to talk to you guys about a potential trade setup. All this week we've been hearing a lot about people that don't know how to find an entry. There's a lot of questions about entries and exits. Exiting and how and when and why is a completely different topic. We can go on for hours and hours about that. So we're going to skip how to exit trades today. And I wanted to show you real quick just one method of how to find an entry. Now, there are thousands of ways to enter a trade. This is just one of them. There are times where this will not work. Just like any trading strategy, there are times where this will give you a great entry and a great trade, and there are times where this one just won't give you an entry at all. Like any other trading strategy, there are also times where this will give you a false entry, where you get in, everything's looking good, and then it quickly turns against you and doesn't pan out. So I wanted to give you guys an idea of one method of how to find an entry. Keep in mind, there are tons of ways to trade the stock market. This is just simply one possible method for you guys to use. It's called the opening range breakout. It's pretty easy. There's really not too much, actually there isn't anything complicated about it. It's just a matter of showing you guys what it is if you've never heard of it before. It is really easy to comprehend and really easy to use. So it is called the opening range breakout method. And what it's doing is tracking the opening range of a particular ticker, and we're going to trade the breakout in either direction of that opening time frame. Now, the time frame, I use the 15-minute time frame. Some people use the 30-minute, and others use 5-10 minutes, and I've heard of people using a daily time frame on this method for other reasons. The reason I like the 15-minute time frame is because what this is doing is taking the opening 15 minutes of action. It's creating the upper and lower level of that action, and then it's going to trade the breakout above or below that opening range. So it's really simple to understand. The first 15 minutes, we have a high and a low point. When we break above that high, we're going to go long. When we break below that point, we're going to take a short position. You can use the 30-minute time frame. The reason I like the 15-minute time frame is because what it's going to do is allow some of that volatility at the start of the market to wear itself out. It's going to give us a bit of a direction for the day, and then we're going to trade and try and capture some of that volatility. The 30-minute time frame is going to take more of that volatility out of the market, because what we're doing is waiting for the first 30 minutes of the day, and then we're seeing what kind of a range we get in that 30-minute time frame, and then we're going to trade above or below that range. So if you're waiting further into the market, you're taking some of that morning volatility out, and you're smoothing out and finding a direction. So I like to trade the 15-minute range on this method because it's going to give you some of that movement in there. It's going to obviously a shorter time frame, so you're going to have a little bit more movement, and you're going to have more kind of a possibility to capture some of that additional movement. There are two ways to trade this. One way to trade it is on the initial breakout. The other way to trade it is on the retrace. I will trade both of them depending on what I'm feeling for the day and what I'm seeing as far as the volume and momentum. I will show you examples of both of those. Important, like any other trading system, sometimes this strategy does not produce an entry. So very important. This isn't a magic strategy. There's nothing hard or complex about it. It is simply, if you have no idea where to start as far as how to find an entry for a trade, this is just simply one method of how we can possibly do that. So I use Thinkorswim. I don't know if this is actually a setting on Thinkorswim or if it's something I added in. So you guys are going to have to help me out with this one because it's on my system. So if I added it, it's not going to be on yours. So first of all, can you guys see the screen okay? This is a chart for Home Depot. Make sure we're all watching the same thing. Someone type in chat and just make sure that the Home Depot chart is up on the screen there. Perfect. Thank you for the response. So here's what we're going to do. This button here is going to be your Edit Studies button. If you click on that, come over here, type in ORB, it should pop up. If it's not on your screen, it's because it's a custom setting that I have on mine. So someone type in ORB if you have Thinkorswim, add that to your chart and just see if it pops up for you. If it doesn't, I will provide a link for you guys so you have the study on your charts. I don't know if it's on Thinkorswim or if I actually added it as a study separately. So if it's not part of Thinkorswim by default, I will send you guys a link to one of the charts that has it on there, so you guys will now have it as part of your system. Like I said, I'm just not sure if it's part of Thinkorswim default settings. So when we put it on, this is what we see. There's a few things we can do. I want to show you the actual study first, just to give you an idea of what we're looking at. 9:30 to 9:45. So I have it set for, okay, someone's saying it's not part of Thinkorswim. So I will give you guys a link that has, I'll send you a chart, a link to the chart that has it on there. So you guys will have this study automatically drawn for you. You don't have to draw it. As soon as that 15-minute or 30-minute period is up, the lines just pop up on the screen automatically for you. So I will send you guys a chart so you have it as part of your Thinkorswim studies. Here's how we do it. Begin 9:30, that's the market open. Ending is at 9:45. Like I said, I like to use the 15-minute time frame. So I have it set to 9:30 and 9:45. There's two levels that it's going to show. It's fib extensions, the 38 and the 62. Show it for today only, yes. So that means it's going to populate on today's chart. And show fib extension 2 is set to no by default. We can go ahead and click that for yes. The fib extensions are basically going to give us guidelines as far as where we can start looking for targets if we break out and trade this. So those are the settings. If you want a half hour, just change that setting right there to 10 o'clock. I like the 15-minute time frame because, again, it's going to shake out a little bit of that opening market, but it's also going to give us some potential room to run. So those are the settings. Begin at 9:30, end at 9:45. Fib extensions are automatically in there, the 38 and the 62. Fib extension 2 is set to no by default, so we're going to change that to yes. We're going to click on OK. And then this is what it looks like on the chart. So to give you guys a quick example, this line here, we're not going to pay attention to. This red line is the low point for the first 15 minutes of the day. And this green line here, the thick one, is the high point for the first 15 minutes of the day. So if we zoom in to the 15 minutes, this candle right here is 9:45. At 9:46, this line, and this line is automatically drawn on the chart. So you don't have to draw a single line. This study is going to put them on the chart for you. So we have the high point of that 15-minute time frame. You can see the candles right there. And the low point of that 15-minute time frame. And again, if you go all the way over here, the low point was that opening candle. So that line is drawn at the low of that 15-minute time frame. So within the first 15 minutes, this was the low, this was the high, and these lines are automatically drawn for us. These lines up here, the green lines that are thinner than this one, are going to be your Fibonacci extension. So this is your fib extension 1, this is your fib extension 2. So again, we're going to use those as potential target levels if we don't have any other support and resistance drawn. So I wanted to put this on Home Depot because I don't trade Home Depot, so I don't have any lines on my chart. So all of these lines that you see here, these are going to be drawn automatically by the chart setting. And again, I will send this to you guys. If you don't have it, it is called the ORB Opening Range Breakout, and mine is set to 15 minutes. So the first 15 minutes of the market, the high point and the low point are going to be marked. And then we have a Fibonacci extension and another Fibonacci extension. And they're also drawn to the bottom as well. But since this chart doesn't go to the bottom, those settings aren't shown on here. So you're going to have Fibonacci extensions to the top and to the bottom. And this should be really clear to see. We have in the first 15 minutes, this is the high point and this is the low point. And once we get to that 15-minute time frame, these lines, including the extensions, are automatically drawn on your chart. So if I pull up any chart, let's go to Walmart. These lines are automatically drawn on the chart. This would be Fibonacci extension number 1 to the downside. Since this is the opening 15-minute high and the chart didn't go higher than that, it's not showing us the extensions to the upside. So this is the 15-minute low, which you can see the opening candle was the low point in the first 15 minutes here. So this line is automatically drawn. This line is automatically drawn as well. And this is the first Fibonacci extension. So this would be a target 1 if you don't have any lines drawn on your charts. We can do this on any ticker, and these lines are automatically drawn for us once that 15-minute time frame is up. If you have it set to the 30-minute time frame, after 30 minutes, on minute number 31, these lines are going to populate for you. So again, you don't have to draw anything on your chart. It's automatically in there. Once that time frame is up, these levels are going to be drawn on your chart for you. So it's nice and easy because you don't have to worry about anything. You literally just watch the chart. When your time frame is up, the lines are drawn, and you have an idea of what we're looking at. So the way it works is 15 minutes is up. It draws your high. Sorry, this one here is your high point for 15 minutes and your low point, and it draws your Fibonacci extension. What we're looking to do with this strategy is trade when we break above or below those. So this is the opening range for 15 minutes. You can see on this example, it never broke above that 15-minute time frame. This is the low point for 15 minutes. It never broke below that time frame to the downside. So using this strategy, here's a perfect example of how it would not give you any signals. Actually, I'm looking at the wrong one. This line here is the first 15 minutes. So it would have given you one signal to trade to the upside here. This line here is the first Fibonacci extension, which would be your target 1. This is the first 15-minute bar, the high of the 15 minutes. So this one actually would give you a trade to make for the day. So there are days, and I think I have a few examples I'm going to show you where it does not show you that. And this is actually, I wanted to show you yesterday first. So this time frame, if you look up here, this is for yesterday, 10:15. And I want to show you a few charts from yesterday because yesterday was a great trading day. Here in your first 15 minutes of the day, this is the high point that we saw. This is the low point that we saw. So once that 15 minutes is up, those lines plus the extensions are automatically drawn on our chart. What we're looking for is a break above this line to take a long position, or a break below this line to take a short position. You can see here it breaks above, and we go from, this would be 237.23 in the underlying to 237.65. So not a lot of movement once we break above there. So that's going to be a very short trade, or it's going to be a trade that you take to go long and it turns against you and you end up not making money. So again, I want to point out that just like any strategy, this isn't foolproof. If you have absolutely no idea where to start, let's say you didn't do any research the night before, you're not looking at headlines, you wake up late, you fire up your computer right at the bell, you have no idea what to look for, this would be a method you can put on your charts to get an idea. But you can see it's not always going to work for you, just like any other trading strategy. So I have a few examples where it doesn't work to show you that it's not a magic indicator. There's no such thing as that. So the rule is really simple. When we break above this line, we want to take a long position. When we break below this, we want to short. And you can do this with underlying common shares, or you can do this with options. So here's an example of one way to trade. When you break above this line, you can scalp it really quick. So you go from here, it reaches a high, it pulls back a little bit, climbs, makes a lower high. This would be maybe a double top over here. It tried to get up above, couldn't make a new high. It double tops there and drops. So that's a short trade. That's one that if you're scalping, maybe it works, but chances are you're not going to make a great trade on this particular breakout. So one way to trade it is once it breaks above this line, you can scalp it really quick to try and make a quick movement up. That's one way. The other way is to trade the retrace, which would be it breaks above that line. You wait for it to retrace back to that line and bounce above it. And when it bounces above, if it holds its support, then you can place your trade to go in whatever direction it's going in. This isn't a great example because it didn't actually hold the support. It did break below it a little bit. Same thing here. When you break below, if you're quick and you like scalping, you can try to scalp there. But again, in this particular trade, it wouldn't have worked very well. So it broke below it, but it came back really quick. Over here, when it breaks below, we go from 236 area down to 234.88. So when it breaks below here, that would be a good short position to take. You can buy puts or you can short the underlying, and you can take it down for a few dollars this way. When it pops back up, it's about to that same range there, about that same range, about that same range. You can see it's breaking above a little bit. And then over here, it's acting as resistance. Here it's resistance. Here it's resistance. So what's special about this line? Nothing really, other than it's a support and resistance line. That's all these lines really are. They're support and resistance for the first 15 minutes of the day, right? If you look at this, this is the low point of the first 15 minutes of the day. So we draw a line there. This is the high point of the first 15 minutes of the day, so we draw a line there. On this particular study, the lines are drawn for us, so we don't have to worry about it. So when it breaks below this line, it's not surprising to see that it would come back here and use this line as resistance because this was the early morning support. So support becomes resistance. Now it's not perfect here because it does break through a little bit, but it's perfect resistance here, here, and here. So there's nothing special and magic about this line other than it's just a support or a resistance line. In this case, it's the support. It's not really a support line. It's just the low line of that first 15 minutes of the day. Once we break through, it becomes a resistance line for us. Again, this isn't a perfect example because up here it does break through a little bit. Over here, you can see how it's acting as resistance. So it's really nothing more than a support and resistance line. But the strategy would say when we break above or below, we're going to take a long or short position based on what direction we're playing in. So that was Apple from yesterday. Microsoft, for the first 15 minutes of the day, this was the high point right here. So at minute 16, this line is automatically drawn on our chart for us. It hits that high point and pulls back a little bit. It comes back again. If we zoom in over here, it comes back again, but can't get above that area before it pulls back a little bit more. So again, what's special about this line? Nothing other than it's a resistance line for the first 15 minutes of the day. So they're not magic lines, they're simply support and resistance lines depending on your time frame. In this case, we're using 15 minutes of the day, and that's the high point of the first 15 minutes of the day. So it's not a magic line, it's simply a resistance point for that first 15-minute time frame. It pulls back, we climb a little bit, we don't get right up to there, but we get pretty close. And it's just kind of pulling back slightly and hovering a little bit above it. So again, all it is a resistance point for that first 15 minutes of the day. You can see once we break above this, we had a nice move to the upside here. So if you're scalping, there's no reason to get out of the trade because it doesn't pull back at all. If you're trying to do a longer trade, maybe a day trade or a swing, there's still no reason to get out because it's just straight beast mode right from the start here. We had a little bit of a pullback and then it just took off. There were a lot of tickers that looked like this yesterday. So yesterday you almost could have thrown a dart and traded whatever it landed on. But this is the opening range breakout strategy. The first 15 minutes, this was the range of the day. This was the low for 15 minutes. This was the high point in 15 minutes. So the opening range breakout strategy says when we break out of this range, we're going to trade in that direction. When we broke to the upside, you want to either buy the underlying common shares or buy calls if you're trading options. This line here is simply a Fibonacci extension, and if you look, we hovered over there for a few candles before we climbed again. A little pullback right to that Fibonacci level again before breaking through and continuing the climb. What's special about these lines? Again, they're just support and resistance lines, because once we break through, when it pulls back, look where it pulls back to. And to show you that I'm not drawing these lines myself, let's come over here, let's delete that study. Those lines all go away. So I'm not drawing a line here to trick you and say, look, that's the Fibonacci line, it's going to bounce there. So these lines are drawn automatically for you. I'm going to add the study back in here. When I select OK, you're going to see all of those lines pop back up. That line didn't pop up because I forgot the fib extension number 2 is actually by default set to no. So if we turn that line on, there we go. It pops back up, and right where it bounces is right at that Fibonacci level. So I didn't draw this line. That is part of the study. So what's special about these lines? Again, keep in mind, nothing other than they're just support and resistance lines. And sometimes they work, sometimes they don't, just like any other strategy. And just like any other support or resistance line you can draw on your chart. Some will hold stronger than others, and some won't hold at all. What's good about this strategy, again, is that if you have no idea what to look for, this just gives you an idea of breaking out above this level. Well, let's take a call position, and let's see if we can ride it up a little bit. I don't know where the target would be. I have no idea what I should even look at. Well, here's 2 different levels based on Fibonacci that give you an idea of what to look for. And to show you that they're pretty legit support and resistance levels, when it breaks through here, it retraces to this fib level number 1. When it breaks through way up here, pretty good retrace there, but it retraces only to this fib level number 2, and then it stays above that the rest of the day. So just a few examples for you. If we look at Visa, again, this is yesterday's chart. The high point for the first 15 minutes was right here. That line was drawn. The low point for the first 15 minutes was right here. That line is drawn. It breaks above. If you're scalping, that's an entry for you right there. You can scalp an entry. My preferred way to trade, and if you guys have heard me go over some other entries, my preferred way of trading is not necessarily the breakout, but the first retrace and test of a line. If something retraces and a line is tested and holds, that's where I like to go for my entries. I will scalp the initial breakthrough. So let's say you're looking at a high of day and it breaks through. I can scalp that one. But if I'm opening a position that I want to be in a little bit longer than maybe a few minutes or a minute, I'm going to look for the retrace of that. And that's exactly what this one is. So the first trade here, this is our 15-minute time frame. When it breaks through, you can scalp this and try and make a trade. And if it pulls back here and holds, you're still in. Or you can watch the breakout, wait for that retrace. And if this holds here on the retrace, then you can enter for a little bit of a higher probability trade. So it broke through, it retraced. You're seeing that that level is holding, and then it's climbing again. So that's where you can enter for, again, a little bit higher probability. And again, what are we looking at? Nothing magic. It's just a resistance level for the first 15 minutes of the day. So when it breaks through, all it's doing is breaking through a prior resistance level. It came back to test it and held. So just like any other support and resistance trade, it breaks through, it comes back to test, it tested and held. That's a good low risk entry. The reason it's low risk entry is because let's say we enter a call position right here. It came back, it tested this level, it held. The next candle closed above. We're going to take a call position here. If this level fails and this does not hold and it turns around and reverses, as close to this line as we can get, we're getting our entry. So if this line doesn't hold, we're exiting also as close to this line as we can, which means we're going to take a loss, but it's going to be a minimal loss because we're getting in as close to this line as possible. So if it comes way back down here, 10 cents, 20 cents, 30 cents, we're 30 cents away from where we entered. If you let it climb, 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 and you go, oh, it's climbing, I'm going to get it way up here. To test that support, it would have to come all the way back down here to test. And if it didn't hold the support, now you're way down here before you're cutting it. So the further away from your support and resistance line, and that's not just this strategy, that's any strategy, the further away you enter a call position from this support line, the higher the risk it is. Because when it climbs, the further away you enter, the more you're going to have to let it drop to see if that line holds as support. So it climbed, it retraced, it held as support, and then look what it did the rest of the day. There was a nice movement in there. If we come over here, so this is Fibonacci level 1, Fibonacci level 2. This purple line is just the line that I had on my chart from some, I don't know when I drew that line, but that was on there previously. So the green lines are what we're looking at from the study. The purple line I manually drew from whatever day I was looking at when I drew that line. So it pops up here when it retraces to this green line here, which is the first Fibonacci level. Now this is a tight range in here. This is about 20 cents in here between these two levels. But again, it's showing you some support and resistance levels that we can look at. So if you enter this trade without, let's say you wake up late and you didn't get a chance to research anything, and your computer is turned on and you're not sure what's going on, and you can't find a trade because you're wiping the eye gook out of your eyes, you just woke up, you're all fuzzy and not sure what's going on, pull up your chart, boom, here's some instant lines for you to look at, okay? We broke up, we retraced, we're gonna get a position here. Okay, I did no research whatsoever, I don't know what's going on here. Where should I exit? Well, here's our 2 target levels for us based on Fibonacci numbers. So it gives you an idea of some things we can look at, even if you have no idea what's going on. Let's look at Twitter yesterday. We have the opening range, 15 minutes. This was the high point. This was the low point. You can see it broke below. So if you took an entry here to scalp it, that trade would not have worked out. It would have worked out for 1 candle. So you would have had to be really quick, but that trade wouldn't have worked out. If you waited for this trade, this scalp would have worked out. It reached target level 1 based on those Fibonacci numbers. It got rejected, so maybe you'd be out of the position really quick. But if you're scalping, that's what you're looking to do. Scalp, I think a lot of people misuse the word scalp. So the idea behind a scalp is a very, very short-term trade with a very large position. So because you have such a large position, you're looking for a small dollar amount. But because it's a large position, that small dollar amount is going to add up. So the concept of scalping is short-term, large position, looking for small dollar movements, but you're going to make money based on the size. Scalping is basically really quick trading. So if you let's go ahead and zoom in here. It gets rejected here, so that's the 15-minute time frame. It gets rejected, so you wouldn't enter a trade here. It breaks through here, so if you scalp it, you have from 39.72 to 39.84. So this is a pretty short scalp that you would be in. Not much of a range between those, but you'd be able to make a little bit on that. And then when it pulls back eventually over here, it pulls back to that same 15-minute time frame. So again, there's nothing really magical about these lines. They're just support and resistance lines. But the way they're drawn and the fact that they're drawn automatically through the study gives you a strategy that you can use. And again, it's automatically drawn, so you don't have to focus on anything. Once that 16-minute hits, the lines appear on your screen. And if you follow this one, it hit the 2 levels for Fibonacci extensions. Depending on where you get in, again, this is one of those things, if you get in close to this line here, and it's way up here and then it's retracing, depending on your strategy, you might let it get all the way down here to test as support. Because this was a pretty good support line for the first 15 minutes of the day. So if you let it get down here and test, you can capture a much bigger movement. So this is a timed demo that I've got here. There's less than 10 minutes left. So what I want to run through really quickly is some examples for today. These are today's time frame. Let's look at Apple. There would be no trade to take based on this strategy for Apple. So again, I want to point out to you guys that it's not a foolproof strategy. It's not going to make you $1 million tomorrow. It might, but it most likely won't. So if you try to use this strategy on Apple, there's no trade to take. Can you trade Apple today? Yes, you absolutely could have traded Apple a bunch of times today, but based on this strategy, it wouldn't have worked. Here's Facebook. Here's the 15-minute high. It's hovering around this area, so when it breaks through, if you take a long position, there's your Fibonacci extension level 1, and it reached it. When it retraces, it comes back to this level. Again, nothing magic about this level. It's just a support and resistance line. But it holds, and we go back to that level, and we end up back at this other Fibonacci level. So these Fibonacci extensions give you targets if you don't have a predetermined target. Let's look at Visa. 15 minutes of the day. This was the high point. And the high point was from this opening candle because the first 15 minutes of the day is right here. So the opening range was from here to here for 15 minutes. So we get up to this point here at 11 o'clock. This is way beyond that 15-minute time frame, and it gets rejected. So again, what's magic about this? Nothing. It's just a resistance line for the opening candle. It reached it again and got rejected. If you look over here on the breakthrough, you have from 177.92 to 178.26. So there's, again, it's a small move. You're not going to make $1 million off of this move, but it's a strategy you can use if you don't have any previous trade plan for the day. And I want to get a bunch of these in here before the time limit runs out. So let's go through this real quick. This is BA. So opening range, this is our limit here for the upper portion. This is our limit for the lower portion. The lower portion was set over here at the opening candle. It retraces all the way down there, but that low point, it broke it by a little bit, but barely. It got rejected here. When it breaks through, Fibonacci extension level 1, level 2. Those are targets that you can use if you don't have anything pre-drawn. Again, the purple line and all this shaded area, that's stuff I have on my chart from previous days. But these green lines and this red line, those are drawn for you. So your Fibonacci extension levels 1 and 2, those are target levels if you have no previous idea of support and resistance. Netflix, really quick. We have a small breakout here. You can place that trade. If you were in that trade, it wouldn't have worked out very well. If you were scalping, actually Netflix, the scale on this is pretty good. So 286.74 to 288.17. So there's a pretty good range. If you're trading options, you can make a little bit of money on that. But it did end up pulling back, so there wasn't a great longer-term trade there. BABA, if you traded BABA today, there really wasn't any kind of a trade. This is the opening low. If you tried to scalp it here, you could have made a little bit of money. It would have been really quick, or it would have turned into a losing trade. The opening range, it got rejected here again. You can try the scalp here. Again, I like to buy the first pullback. So when it breaks through and pulls back, it didn't hold the support really well here. So there isn't really much of a trade here. So I'm showing you these because I want you guys to understand that it's not a foolproof system like anything else. There are times where it's going to work, and there are times where it won't. Here's 3M. Here's the opening 15 minutes. If you got this trade when it broke below that 15-minute, you have from 163.06 to 162.37. It breaks below. Here's your level 1. Here's your level 2. Those are your target levels. And it actually reached both of those. Look how it bounced exactly where that Fibonacci level 2 is. It bounced right off of there. And then the rest of the day, it comes back and it's got some up and down movement. But your opening range breakout would be trading this opening range break to the downside. Fibonacci level 1, Fibonacci level 2. These are extensions, and it bounced almost exactly to that Fibonacci level 2. So again, there's nothing magic about these. These are just support and resistance lines, and they are Fibonacci extensions. IBM, same thing. Opening range right here. It breaks below, and it reaches that Fibonacci extension level 1. So your target 1 would be right here. It pulls back, but it stops here. So again, all this line is a resistance line. It was the morning support. When we broke through, it came back and it became resistance. When it punched through, we have some upside movement. When it breaks through again, we have downside movement. So again, it's not necessarily a trade you open up and you stay in the entire day. Sometimes you can, like yesterday. Sometimes you can't. But if this is the opening 15-minute range, when it breaks below, there's your trade. And if you don't know where to stop, here's one example of where you can use your first target level. And again, these are automatically drawn based on the Fibonacci extension. So the opening range breakout is basically the first 15 minutes for me. I like 15 minutes. You can use 30 minutes. Some people use 5 and 10 minutes. I like 15 minutes because it shakes out a little bit. It's going to set a high and a low for that 15-minute period of the day. And the trade is simply a break above that high, you take a long position. A break below, you go short. If you don't know where your target levels are, there's Fibonacci level 1 and 2 that are automatically drawn in this study. and having no prior lines on your chart, that's going to give you an idea of what to look for. And it doesn't necessarily stop there. This one actually almost perfectly once, twice, broke through a little bit. So sometimes the lines are perfect, sometimes they're not. But if you have no idea of support and resistance, let's say you pull up a ticker you've never traded before, and you don't have lines on your chart, but in the heat of the moment, you're trading it because you see a breakout or there's momentum or there's news, a headline comes out, you pull this up on your chart. It's something you haven't traded, so you don't have lines on your chart. This is just going to give you an idea of what you can look for as far as where you might want to exit. And then while you're in the trade, maybe you pull up different time frames and you draw some support and resistance. But without drawing that, this gives you the Fibonacci level, 2 different levels that you can look at for support and resistance. So again, guys, there's nothing magic about it. It is simply a support and resistance line for the first 15 minutes of the day. And we have about 2 minutes of time left before the time frame shuts us off here. So I'm going to do something real quick for you guys here just to make sure I can get your answers, get your questions answered. Here's how you find me. Go to Twitter at 7star Mike. Facebook, I don't really use a whole lot just yet, but 7star Mike on there. Instagram at 7star Mike. Go to YouTube, 7star Traders. Type that in the search bar, you'll find my channel. There's a video on there that I'm going to show you that gives you other ideas for how to find entries. Today, I just wanted to show you one specific one. You can go to 7startraders.com. You can hit the submit form and send a message directly to me. My email is mike at 7startraders.com. Also, this is a brand new group I just started. I haven't really put any content on it yet, but if you go to Facebook, if you're active there, look for the group called Options Day Trading for the Retail Trader. I'm going to try and set that community up and get something going for us where we can all chat about options day trading for the retail traders. So if you guys have any questions about this, I know I ran through it, a few examples pretty quick. It's a pretty easy system to understand, but if you have questions on this, since time is running out, we are going to get cut off here. So go ahead and pull up any of these ways to contact me. And if you have questions, send them over to me. I will get them answered for sure. So really quick, one thing I want to show you before this cuts off, if you go to YouTube, type in 7-Star Traders, hit the bug, go to the video section, go way down to the first one, this first video right here, click on that. How to find entries for options trading. This is one ticker, and it's going to give you 6 different, I think 6 or 7 different examples of how to enter a trade based on one ticker for the day. So that is going to give you more examples. If you have any questions, guys, reach out to me in any way whatsoever on here, Twitter, Facebook, Instagram, or YouTube, email, or the website. And thank you guys for joining me tonight. The seminar is about to kick me off really quickly here. We've got less than a minute. So again, thank you guys. Email me if you need the link to the ORB strategy. If you use Thinkorswim, I will send a chart out to you. So email me or contact me anyway on Twitter.